brief as possible. It won't be any one of these 45-minute marathons because he's got screaming kids that are demanding dad's attention as we speak. So let's get on with the show, and hopefully I can say something of value to you good people and make it worth you guys tuning in this fine day. It is the 5th of December. Geez, just powering our way through this year. We're going to be through the end of it here pretty soon. I suppose just to update, actually, Sjord and Chris and I had a really cool meeting about getting the screener engine back up and running and nice and polished for the user. So we'll be working away diligently on that through the rest of the month. Can't wait to give you videos and tutorials on that. Super excited there. Trading partners and I busy trading crude oil here. Opening range trade this morning. Yeah, looks like it's a bit up, a bit down. We for whatever it's worth, opening range trade went long. Took profits on a couple contracts, so booked a nice winning day. Have a runner going here. Ideally, I like to try and close out the runner on the actual close later on in the day. And sometimes if you're really lucky, you can close that trade out on the highs. It kind of looks to me like the market's kind of stuck here. You never know. Coming out of the European session, market did catch a bit of a bid. If you were one of those botters, I'm already long the opening range trade from down below here. My stop on the remaining position is at scratch. So if this thing rolls over, I'll just walk away on that last car at scratch. But I had 1 low, 2 lows, 3 lows, 4 lows. And interesting how the bot actually set up quite nicely there. So if I wasn't in the opening range trade here, I would definitely be in the bot. And you can see the bullish resolve here is being tested as we speak. Might just get stopped out on the remaining position. And in a weird sort of way, this is kind of what I've been seeing in the market. We had, a pretty nice sort of pump up here. First thing, the tech stocks all were rocking and rolling. But you can kind of see things are kind of rolling over here. We've got the ES now down better part of 7 points on the day. There is settlement. So they're a bit sanguine here. And you can see huge, actually this is the gold market, beg your pardon. Let's pop on over to the stock market. So where's settlement up here? There's settlement. So we did rally back to settlement on the ES. The NASDAQ was booming higher here first thing this morning. Whole market was catching a nice bid, risk on. So why are things sort of rolling over? As you can see, there was the NASDAQ. We were ripping higher here earlier, but we've kind of rolled over a bit. Almost looks like an inverted head and shoulders here just off the lower time frames, but there's your 4-hour chart. You can see nice little double bottom, big spike back up into moving average resistance, and now we're just settling back down here. And it looks like we're going to have a fight here at settlement here shortly. And then finally the gold, which is, I guess, basically the anti-risk on. So risk on was catching a bit of a bid here this morning. Like I said, we were long crude. Off actually a really interesting level for the futures traders. I've often said that, the Top Step guys, they have sort of a, try out to become part of a funded trader community, all that, $50 a month. And one of the things that they give you is Johnny Hoagland, my old boss there. He gives you levels that he likes to follow. And I think that that's worth $50 a month subscription price alone. So anyway, that was quite a pivot off of that level here. But you can see now we've M'd out. Had you been in the bot, you would have been stopped out here. And we might just get stopped out on that last remaining contract. On the opening range trade. We'll see what happens. If anything, Foggenbaums would probably ought to now be thinking something along those lines. Actually, then that would make sense, right? They just want to wash the overnight lows if this thing really does puke out. So anyway, there is, if anything, that's probably a really good proxy for They were bidding up risk heading into the morning. We had a whole slew of econs come out here. And yeah, they kept the market sort of bid up here through the European close. Of course, we always want to make sure the Europeans lose as much money as possible. But if anything, you can see the Europeans, they kind of, maybe a mixed bag, a little bit of a swoon. But coming out of that European close, they tried to continue that bull rally. It stalled out right up against this previous double top. And now we're rolling over here a bit. And as I sort of showed you on the rest of those risk charts, the stock market charts, it looks like risk is calming down here a bit. There are all the stock indexes. In fact, look, you can see the Russell 2000 is very weak here. Interesting, in the face of all this, good old Bitcoin, and now we're starting to hear people talking about like commodity super cycles and all this. Well, actually not commodity. Bitcoin and cryptocurrency super cycles kicking in. Oh, God. And if anything, on the TRI community, if it's one thing I really love about the TRI community is, we're kind of like, I'm from Missouri, show me, I want to see actual hard evidence of things before I start listening to the media touting. But interesting to see how the bond market actually is working higher here. So I would have thought risk would have been relatively firm, but you can see there's a big fat double top there in the crude. So a bit of a pause there. And if anything, I wouldn't even be surprised if the bond's even like that. So the question here for you and the public in this sort of free broadcast is, what the hell's going on? Why is this happening? And when I looked at the data, we had just a ton of data prints here first thing this morning. So what a surprise. Of course, China is in full-blown recession now and accelerating to the downside. So these PMI indexes, simple reading, above 50 is economic expansion, below 50 is economic contraction. So not a big surprise. China is a total train wreck. I've told you repeatedly, Canada's a short. Stay the fuck away from this. Whatever you do, do not buy Canadian real estate. That's just throwing your money away. Had a little bit of econs coming out of the States here, and I guess one of these data prints that we have followed for a while, I don't know whether this is PMI, which used to be the Purchasing Managers Index. Now they're calling it the LMI Logistic Managers Index. Why do they keep changing the names of these stupid things? I don't know. But anyway, 49.4, that is slightly below 50, which actually implies contraction as well. And yet, interestingly enough, retail sales, remember, this is actually like Druckenmiller's favorite indicator, 3%, so actually calming down quite a bit. You can see last month's print, and I got all excited about this. There's no way the Fed could lower rates with retail sales at 6%. That was nuts. So if anything, that's good to see. And you can see the US PMI data, it's just hovering right now here. So this is like the global economy reading, 50.7. So it's still hanging in there for expansion. But then if we go down to some of these other data prints that came out of the States this morning, interestingly enough, I think what's happening here is the manufacturing sector is kind of still contracting.
Stop filled.
Well, and I just got stopped out on the crude, so I'm done there for the day. But the services sector is actually very positive down in the States. And this would be like services for retirement, all the, healthcare, all that kind of stuff. So I think the services part of the economy down in the States is very strong. But interesting to see things like Jolt's job quits. Actually, the quits ticking up slightly. I don't know how the Fed's going to interpret that. That'll be interesting to see. And then, we have a minor print that it would be interesting to dig into this. You hear a lot of people talking about how the vehicle market right now is in really bad shape. Like DiMartino Booth, Chris's girlfriend, she's always going on about the auto sector. I don't know, 15.3 million units. That's still pretty strong number. But I think you can see as we're sort of coming out of, I guess this is sort of like the sweet spot for auto industry. You can see it's kind of tipping over, and I suppose if that M's out, then that's probably going to raise a lot of eyebrows around the Fed and stuff like that, but it hasn't quite rolled over just yet. So anyway, we'll see how that goes. So on balance, especially, China does stay away, but kind of a neutral reading. Yes, the economy is slightly expanding. I suppose what you really want to see is, do we have M's or W's coming in on these data sets? I don't really see anything compelling out of today's data. And it'd be interesting to see where, I suppose you can make an argument with the services sector as strong as it is here. It's going to be tough for the Fed to justify cutting rates. And then I also really want to keep an eye on this jobs, the JOLTS report, the jobs quits. You can kind of see that people are not quitting their jobs nearly as aggressively as they were in times gone by, because maybe they're feeling as though those jobs, there's not as many out there, and they better hold on to their job if they have one. I don't know. Interesting to see what happened here. So on balance, nothing really out of the data here today that would point to rip-roaring bull market. And I get the feeling that risk itself, especially things like the small cap market, you can see it's kind of looking heavy here. We've also talked too about the fact that we're heading into the second week of December, which is all around that irrational exuberance kind of conversation. Usually the risk markets take a bit of a pause into that. So seeing the stock markets a bit weaker here, I think that makes sense. And then finally, I would just simply say, what are the charts telling us? And what I did notice is if we look at something like the NASDAQ, we actually have, it's not quite a double top yet, but it is looking very toppy. So on a clothesline basis, you can see we closed up here, then we pulled back, then we rallied up, did not make a higher closing high, and then we started rolling over here. I would actually expect, because this shooting star here, the wick is actually slightly higher, I would actually expect a little bit of a test, candle body highs for trade location kind of idea. And then if this thing really is weak, we'll tip over. But if anything, I think probably what's happened here is we had that push up in through sort of the Black Friday, Cyber Monday, and now we're getting that hangover. Now, does this translate into some big thumping back down into 38.2s, 50%, all that kind of talk, which should be normal technical behavior? It should, but there's no guarantees in this business one way or the other. You can see all the risk markets now have all rolled over. With, I guess, the real question that I have for here is, what does our gold market do to us here today? That is, technically speaking, a bearish engulfing bar that came in here. Not quite a key reversal, but a very negative bar nonetheless. So I would imagine that this is going to probably take a few days just to clean up this trap that was laid for the public. And then we'll find out. Probably my hunch is candle body highs for trade location. We revisit that 2100 area, and then we find out whether this thing's for real or not. And I think this also sort of corresponds with the idea that maybe the US dollar, it's interesting how on Sunday we did that look at the COT reports, and it said that institutions were actually hedging, expecting a rising US dollar, and the large specs, of course, they facilitate that trade, so they're forced to make money. They have no choice. And you can see how the US dollar here is grinding its way higher here. The services sector of the US economy looks relatively okay. So I don't think there's anything breaking there. And I get the impression, especially with this top that's now come in on crude, I get the impression that maybe the bonds are actually like, actually the inflation problem is not nearly as bad as we thought. I've still said repeatedly of late that I'm not going to call a top in this whole inflation conversation until we actually get a tick back up here and test these highs. But I don't think that that comes until the new year. So if anything, how do we sort of position ourselves getting ready for the Santa Claus rally? I get the impression that you're probably going to hear the talking heads in the media and stuff start to say that the Santa Claus rally will start in earnest and get going in earnest because interest rate pressures are weak. Now, interesting, and actually look, you can see as the crude oil topped out, look who's trying to bottom here. Here comes the gold. And an interesting side, I'm really scratching my head here of late, asking myself, what's going on here with the cryptocurrency markets and something like gold? Are they correlated? Is this risk off asset? Or is this a part of sort of NASDAQ tech bubble and a growth proxy? Regardless, Bitcoin is in a bull run right now. I don't think it's in anybody's best interest to call a top here. And you just got to let this thing run until it runs out of steam. I had 3 different technical objectives that have all been hit with yesterday's price action off this weekly price chart. And I've been barking about this for a while. So we had 50% of the total range. That was a big technical objective. That has now been satisfied. Colin from Colin Dump Chaser Zone and Hero. And actually, we might even, I don't know whether we can get Colin on the call tomorrow or not, but one of his associates, Dan from Blockmates, is going to be on the Coinigy show with us tomorrow night, talking crypto. And of course, Colin has been talking about this 50% retracement, and this is Colin's Dump Chaser Zone. This sort of teal box, but good to see that technical objective has finally been hit here. As well, we had a bull AB equals CD kind of idea, bull flagpole, that level's been hit. So now we have to actually start thinking, is this alt ABCDs? Where's 127.2s? Where's 1.618s? And then as you can see too, just off of this W pattern, there was a 2.618, that's been hit. So the next stop, if we blow right through 2.618, is this purple line here, which is the midpoint between 2.618 and 4669. And notice how that lines up nicely with that 61.8. And, just put it all together, and I guess we'll finish off the broadcast with a quick look at this. I put out a tweet the other day where, the only question is, where the hell do I find it? This is the past 2 Bitcoin cycles, going back to, 14, 15, 16 bull run. Notice the W and just basically powering higher right up into tagging 61.8 and then taking a pause right before the halvening. And then we had to go through a bit of a consolidation. Last cycle, it was like put in a bottom and straight line up. Vroom! Straight up to 61.8, and then we had to come all the way back, right back down to the bottom before the halvening. Since we didn't really get that straight move up, we rallied up into the summer, and then we just consolidated for, I guess, about 3 or 4 months. I think you kind of think of this as a midpoint consolidation, so you go A, B, C, D. Like we said, that takes us up into here. And then if we have, it might be interesting to throw on those alt A, B, C, Ds. I'll probably alter that chart, the 50%. Actually, there's the bull A, B, C, D objective. See where 1.618 is. My hunch is it probably lines up against this high here and that 61.8. And frankly speaking, I think that's got to be our next objective in here. And then also, too, we've got 4.669, good old Foggenbaum, floating around up against this high as well. You could also argue for all the liquidity pool type people that this peak right here, there's a ton of stop loss orders just sitting just above that level. People that went short on this breakdown and probably still have that position working. And so if they wanted to go after a liquidity pool in the near term, I think that's probably a pretty good objective. So right now, I'm just basically counseling if anybody wants to listen to whatever the hell I think. Probably not a good idea to step in front of this. And if anything, we've been seeing a lot of action in the altcoin space. What was really interesting was looking at the crypto space. Look at total. And I'm not quite sure what's driving total here, but you can see total's in uber bull mode as well. And it's kind of odd because I actually go and I look at the various different altcoins, and I'm trying to figure out where the hell this rally's coming from. I mean, there's that AGLD, he's up 14%, but you can see there's a bit of red on the screen. So I'm still not quite sure exactly where this this bull's coming, but I do see actually quite a bit of green on the screen now. So things are turning back up to the upside here. The little sort of probing Bitcoin shorts that we had against the highs yesterday, they were stopped out. It's no big deal. It's just trader's life. The bot sort of trend continuation trades, they're still working away. You can see first thing this morning, they came right back down to their breakout levels, but they've firmed back up here now. And I would imagine that if this bull is still rip-roaring, that we're probably going to see a lot of these bullish bot setups. I mean, they're all over the place. On crypto right now, I would imagine a lot of them are going to start performing here. So, eyes peeled. Of course, positions locked. Very difficult to make the argument that this is a value market right now. We are trading purely on momentum, and if momentum should roll over and break, well, then it's time for corrections. There is no sign of that momentum break just yet, so, just ride the inertia. If you were fortunate enough to get long off of the bottom, past year I've been barking at all of you people to get your skirt together and load up on these things. So here we go. And, just make sure if you did participate and you did buy, that you've got those profit orders working so that you pay yourself for your hard-earned effort. I've seen too many people, in fact, both of these previous cycles, both of them, folks, I've watched people literally, I'm a millionaire and it's gone. I'm a millionaire and it's gone. Don't be that guy. Just if you want to sell halves on doubles, triples, whatever, quadruples, just make sure to pay yourself a little bit for your hard-earned effort. I mean, trust me. This is venture cap, up and down like a horse drawers, as they say. We are in the up phase, and the good part about this is we're not even in the bull market yet. My hunch is there's got to be some give back here. I don't know how violent the pullback is going to be. It might just be tepid like this year. It might be a full-blown retrace like this one. I don't know. And really, I don't want to get into the business of predicting the future. What I'll just simply say is until I actually start seeing M's in price, the path of least resistance is up. So enjoy the ride. PMA for the win. Slow and steady wins a race. We'll leave the free broadcast at that. Come on over, hang out in our after party, and we'll chat with Sjord and see what is going in his neck of the woods. And we'll leave it at that. Have yourselves a great day. PMA for the win. Slow and steady wins the race. All the best. And bye for now. Oh, I got to hit the stop button now. All right. Bye, everybody.